All right, everybody. Thank you for coming back to the Dividend Doggo Show here on YouTube. And I am bringing you into a portfolio review. This is the yearly review. We're going to go over exactly how the portfolio did. From the end of 2020, 1 year ago, I started making videos here on YouTube chronicling my journey through the stock market to reach a portfolio goal of earning $80,000 a year in income from dividends. Now, at the beginning of my series, if you want to go back, the very first video is still on the channel. It's a little sketchy, it's a little rough. Hopefully I've made some improvements, but this is a screenshot just capturing the start of the portfolio from the last trading day of 2020. So the value of the portfolio was sitting at $456,482.41, of which gains were $61,174.53, and the market value, the market gains alone were $47,159, and then the earned dividends for the year of 2020 were $14,015 total. Now, that was a spectacular year to me. Never in my wildest dreams would I have believed what has happened with the portfolio. And if you've watched any of the more recent videos, you know that the value has gone up significantly, but it's staggering to me to see exactly how much it has gone up. So let's go into look at the actual portfolio. This is Sunday, the 2nd of January. As you can see, in 2nd of January, 2020 was the date that I had taken this video and the screenshot. So you can see that was 1 year in the stock market. And so far today, I bring you into the portfolio now, and this is what it looks like for the 1 year. This is just for 2021. So we have clearly gone up pretty significantly there in the dollar amounts. We went from, the 400,000 range to $695,945.95. The total for the gains for dividends and market gains combined was $153,800.66. That gave us a total money weighted average return of the investment portfolio for 30.15% for the year of 2021. That is absolutely staggering for the returns. A lot of the money was invested in individual stocks over the year, and I've just recently started going more toward SCHD and weighting a large chunk of the portfolio toward that. And if you've seen any of the prior videos, you know that that's kind of where I'm shifting. Is I'm holding a little bit more in my high conviction stocks for 2022, stocks that I think are just going to perform and print some money for the portfolio. And I'm kind of shifting around out of assets that have not performed particularly great. Now, one thing that is mind-blowing to me is that, I made $14,000 in dividends for 2020. In 2021, I made $10,000 more. Now, a chunk of that was off the back of AT&T. It was a pretty big position in the portfolio. When I sold out of it earlier this year, I sold immediately based upon the news that they have that they're splitting up the company, and I did not like that news at all. So I went ahead and lowered the earned income significantly. So I think the earned total dividends would have been a little bit higher if I had kept AT&T in the portfolio, but the market gain would have shrunk pretty significantly, as I believe it was down about 25%. Maybe more than that from where I had purchased it and where I sold it. So I'm kind of thankful that I dodged that bullet, but I did lower the overall yield coming into the portfolio. So I'm going to struggle to get back to this number of 24,000 in 2022, but I am going to try to do it. Even without it, I'm going to give you a little glimpse. This is a tool that I use to kind of estimate the forward yield of the portfolio. This is Propeller. This kind of is a tool from Dividend.com. I use this tool just specifically to look at the forward yield and then look at the X dates of stocks that are coming up and kind of see what is coming in and what's declared. As you can see, there's a lot declared for January and February already for 2022 and not much declared for March. But you can see in here that our estimated total yield of the portfolio is about 2.93%. This is with the shift toward Apple and Microsoft. I did a pretty big buy of Apple just this past week and shifted around a bunch of stocks in the portfolio. This does encompass that. So this year's forward look starting right now today, if I didn't invest any more money and nothing gave me any raises, the portfolio would earn about $20,000 that will get reinvested into the portfolio this year. So that's kind of how that looks. Now, one big thing I wanted to talk about is my performance, the money weighted average return being about 30%. I factor that as being exceptionally successful. And I do feel that part of it was kind of blind luck in VST coming back up as much as it did near the end of the year here with their announcements and their news. That definitely changed this percentage significantly. As you can see, I'm going to jump into the portfolio view here. You can see when I go down into utilities, VST 1 year is up 31%. And this is, $146,000 of the portfolio is in utilities, but 140,000 of that is in VST alone. So this stock having come back up significantly above where my cost basis was, this went as low as 15 and change per share earlier this year. So I did not expect this to come up into the 22 range, like it closed at 22.77, and that's absolutely amazing. I did not expect that to happen. So I expected my returns to actually be a little bit subpar this year because I expected that position to take significantly longer to ramp back up. Now, one thing I do want to talk about is that that's a money weighted average return. That is how M1 defines their characteristic for the return. Now you can go in and you can look at the capital gains alone, but that really isn't the whole picture that I want to see, because I want to see this earned dividend income. Now I do want to click on this because I think this is a really cool feature that they've recently added to the page there, and that's just a breakdown by slice. Now this isn't completely accurate for the portfolio because I did have several different pies, like the REIT pie, that had dividend income that's not being shown here. But I wanted to show you that hopefully this will be the same for 2022 and going forward. So that should give you some kind of just a cool little view of the breakdown of where I'm earning the majority of the dividends coming out of the consumer pie. Followed up, like utilities is just a couple down there because VST has raised their dividend this year, and I do believe they're going to give us a pretty healthy dividend raise for 2022. I'm looking forward to that in February, Marchish, that will come into play. So talking about the percentage change of the portfolio as a whole, you can obviously see that I put a significant amount of money and an effort into building out the portfolio. The overall change to the portfolio went from $452,490 to $695,000. The cash flow put into the portfolio was $113,000 and $800, basically just shy of 114 grand. Now that does include the dividends because all the dividends rolled back into the portfolio, sans about $200 that I took to create multiple custodial accounts. Now, that is a significant amount of money. We saved a lot of money early on throughout the year. We sold some stock in another portfolio to purchase a house and do a lot of things. So our costs of living have gone up a little bit. So I do not expect to be able to hit that net cash flow number. However, I do expect to see at least about 50 to 60,000 go into the portfolio over 2022. That's kind of going to be my tentative goal, is to earn about 21,000 or so is the goal from dividends alone. And then hopefully if I can, I'm going to try to add about $48,000 throughout the course of 2022 to the portfolio and continue to build it. Now, one reason I wanted to kind of talk about that and discuss that is the total difference in the portfolio. When I consider that, I look at the percentage change, and I used a calculator for this, and the percentage change of the portfolio from its starting value in 2020 at the end of 2020 there through the end of 2021. This gives us a total percentage change on the portfolio of 52.45%. So almost 52.5% total increase to the portfolio between dividends, capital gains, and capital that we added to the portfolio for 2021. Now, I don't believe that I'm ever going to be able to get this type of number again. The percentage change of 52.5% for the portfolio was absolutely staggering for the year. Just to give you a really good comparison, the 401k account, one of the primary ones that we have, we invest in the Fidelity 500 index fund. So this is the snapshot for that portfolio fund. There's several $100,000 in this particular fund, and its performance year to date for 2021 as of the 31st of December of 2021 was 28.69% year to date return. And that is absolutely amazing, with the majority of that being weighted toward Apple, Microsoft, Amazon, Facebook, Tesla, so on and so forth. This is an absolutely phenomenal fund, and I want to try to gauge whether my work and my effort in single stock picking and everything was worth it. And to be honest with you, I feel exceptionally lucky and blessed to have gotten to the 30% mark from the money weighted average return. Now, these two aren't really factored the same because of the money weighted average return. It's based upon how much money was in the portfolio over that period of time. And you can break down that calculation. There are multiple breakdowns of why they use that on the internet. However, I kind of gauge that against this 28%, and it isn't completely being fair or honest, but it is a pretty close gauge. I like to know that if I just had an index fund, did I beat that with the dividend portfolio? And I consider myself very successful and very lucky with that this year to have beaten that mark out. And as you can see, anyone expecting to get 28% returns every year, that's just kind of magical, mind-blowing Warren Buffett stock picking. That's Peter Lynch level. I don't expect to do that every year. And it's part of the reason why I'm shifting away from the single stocks as much. In the next year, I'm going to be trying to shift a fair bit of money into SCHD and building that out as a core position. And then all of these other positions will be ancillary to that, or they'll be satellite positions. Some of these positions I don't intend on keeping for the entirety of my retirement process. I would love to be able to get to the point where the majority of the money is in SCHD, and then that just rolls enough snowball dividends into the portfolio that we can just withdraw that when we need to pay our bills and finances going forward in the future. So I do think that there will be some positions that I do trim in the future that will go into the SCHD position. And I might even incorporate some point in the future, moving some around into like a total market fund. Building off of single stocks alone is very, very risky. When we get closer to retirement, I'd be much happier having that in index funds overall. Like the majority of our 401k account is in index funds. One total stock market fund, one position in Disney, and then the FID 500 fund. So the only single stock we hold is Disney in 401k. Everything else is index fund set. So the majority of the funds that we'll be looking to access in the next 20 plus years will be from index funds in retirement. And then hopefully this position will be able to cover all of our basic living expenses via the taxable dividend portfolio, hoping that that can be built up even further. And I'm hoping that I can get back to this 24,000 mark through the end of 2022. I'm very, very happy with how the returns were for the year. I would never have predicted that this would be as high as it is. I think we closed out the year phenomenally well, and I do expect it to be a little bit rocky going into next year. I don't expect anywhere near this level of return from the portfolio all in all. So I'm super curious if you made it this far in the video. Let me know kind of what your returns looked like. Were you happy with your returns if you were single stock picking? Were you index funding most of your money? Because that definitely seems to be a more stable, less stressful way to go, in my opinion. Having spent the past couple of years doing a fair bit of single stock picking, I just want to be able to sleep a little bit more sound at night, knowing that the money is a large chunk of the money is more index fund overall and held that way. I just think that it'll be significantly easier for the future. But let me know how you did over the course of the year. I know that there's a bunch of you that have been watching me for quite some time and you comment on the videos, and I greatly appreciate every single one of your comments. I try to reply as much as possible, as quick as I can. And I'm super curious, what did your year-end review look like? I can't wait to see Investing Sensei is going to have a video out soon, I hope. I just watched Hidden Freedom's video. There's some absolutely stellar investors out there to go and watch. I'm hoping that Matt Money will put one out. I'd like to see Joseph Carlson put an end of year video out as well. I'm going to nag him about that and see if he will put his out and see what his portfolio looked like for the 1 year returns. But it's been an absolutely wild year. I thank you all for the support here on YouTube, and the growth that I've seen with this channel is phenomenal. I plan to try to invest more time and effort into the channel and less into single stock investing. And I want to try to get an animated intro in 2022 and do some cool things for the channel. And I hope to communicate with all of you going forward in the future. I do believe the referral bonuses are still going for M1 Finance right now at $50 that you get if you deposit $100. There will be a link down below in the description for the referral link. If you deposit $100, you get $50 extra, and I get $50. I believe 16 of you have used the referral link for the portfolio, which is absolutely insane that we're at like I want to say it's like $530 in referral money. Normally the referrals aren't 50, they're normally like $20 or $30. So it's absolutely amazing that y'all have done that, and I appreciate every single one of you who comment, like, and have subscribed to the video. I hope that you found this overall portfolio view for the 1 year returns interesting, and I'm going to close out just by clicking on each one of the remaining pies in the portfolio so that you can see what it looked like on the 1 year. Healthcare was up an absolutely staggering amount at 33% total for the year. Consumer was up 30%. 30.73, sorry. And that's absolutely amazing, with one of the headliners being Costco, Home Depot, Lowe's, Target being 35%. Absolutely amazing. Those all had phenomenal years. Pepsi had a pretty good year. Coke had an okay year. I'm keeping this position because it's just one of those heartfelt stocks that I really love having in the portfolio. Mo had a pretty solid year at 24.81% return for the gains there. That's absolutely amazing. Utilities, again, I already showed you a quick look. Duke was at 22%. VST was at 31.42. Then we have tech. This is just Apple and Microsoft. Now, this shows Apple is down 40%. Again, this is money weighted average return. The last couple days in the market, Apple was down a fair chunk in just the last few days, but it overall was up for the year. Now I made the change like the last 3 days of the trading, so it did go down a little bit in those 3 days, and that's why you see that. If I zoom out to all time, you'll see it's pretty significant, and it's a positive number. So overall, I think Apple's going to be solid for the next year, and we'll see kind of what happens with that. Microsoft being up 46% for the year as well. Then we have finance. We'll go into Coma Money first. And that this position started in May of 2021 at 12,000, and then I ramped it up to 66. So this has had a little bit of time to grow, but I only had this position for about half the year, and this would be significantly higher if I had held it the entire year. Berkshire Hathaway, again, is the same time frame for the investment. It's only been held for about half the year, so those percentages are a little bit low if you were to go in and look at them on the 1 year. If I'd had them the whole year, those numbers would be solid. The finance pie overall, these positions, I did the beginning of 2021 a big buy of JP Morgan, and it performed astronomically well for me. Bank of America also performed phenomenally well. Bank of OZK and Hingham have all performed just phenomenally well. The beginning of the year, these stocks were still a little bit light from 2020, and the 2021 year has just been amazing. You can see $1,400 in earned dividends came in from just the finance pie over the course of the 1 year. We got some amazing raises from those stocks. Finance had a great year. Industrials had an absolutely awesome year with CAT, Raytheon, and LMT. LMT's still been a little beat up, and I'm still looking to add some to this position. Throughout the course of the year, we had over $60,000 in this total position, and I trimmed out a fair chunk of that over the course of the year, down significantly here the end of January or December, adding that money into Apple. And then we have the monthly dividend stocks. Now this is primarily BST, which BST had an absolutely awesome year at 28.34%. And the owner's rewards, I'm not really going to go into these because this is relatively new. I've only had this pie since December 10th of 2021, and overall it's barely done anything. I don't really expect a lot from this. Where I expect to see the returns from this is by using the credit card to make purchases at these companies. I believe that the first payment is going to be coming in here shortly from the owner's rewards M1 credit card, and I believe it's going to be about $172. And that is money that is going to go straight into the portfolio, and I'm going to roll that likely into BST. I think that's going to be my concept idea for the credit card use over 2022 is I'm going to roll all the rewards into BST and see how that does for 2022. And that will just bump up the monthly gains, the monthly dividend for BST every month. If I'm adding, a couple of shares every month, that's just off the credit card rewards, because I am pulling like 10% out of several different categories like Netflix and Spotify, GameStop, doing video game purchases and stuff for family members. That's absolutely awesome to get 10% back. So that is currently how we are looking for the end of year this year. Again, thank you very much for watching. Let me know down below in the comments how your year ended up looking, and if you can figure out what your percentage return, your percentage change for your portfolio was. Obviously, the smaller your portfolio, the more of an impact you can have with that number. And I'd love to know what your percentage change was for your portfolio from 2020 to 2021 and the end of 2021 there, what it was. So thank you very much for watching, and have a great new year.